please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and today is a full house. We have Anuj and Sonia with us. Morning, both of you. Well, Anuj, in your absence, the Indian markets actually outperformed. We had wobbly Asia for the last 2 days and Wall Street as well. But we stood our ground, and that perhaps is an important point to take on board. There were minor domestic supports in the form of a better bond market because of some RBI rules, and that definitely helped the PSU banks, and some bit of recovery in the ICICI stock as well after Mr. Bagul's interview. But my own sense is that the positive news is kind of running out. The PMI numbers were not much to write home about, and the bad news on banks just keeps hitting. It's inexorable. So we will really have to see if this week's outperformance continues.
Okay, well, Anuj, morning. Last 2 days were good, but what's the sense you're getting? Because, you have been talking about how this could even be a counter-trend move, right? Is that the case?
Yeah, morning, Sonia. I hate to say that. Look, the market is still heavily net short. So, and counter-trend moves look like they're the real thing. And sometimes, they have big moves. The pattern so far is so much similar to the March series. The first 2 days were really good. And after that, we had a big drawdown. And in between, we had a 200-point rally. So my sense is still 10,450 on the Nifty. This remains a counter-trend move, but it could be a tradable move. You could still trade. As of now, unless there's some fresh negative, it looks like for now, you have made a bit of a near-term bottom. Even if, say, that gets retested at some point, say in May, perhaps not in April, that may happen. So, I mean, there's no doubt about it that this is not a resumption of the big bull market that we had.
That we had till December.
Exactly. This market is going to remain choppy. You'll have to weigh your risk-reward. The Bank Nifty faces big resistance at the 200-day moving average of 24,850. And my basic sense is that with FIs continuing to create shorts on all rallies, and the fact that the rally is being driven by mid-caps, mid-cap-driven rallies normally don't sustain in a downtrend. So, IT remains the leader, though it yesterday underperformed. So that adjustment is still on between banks and IT. I think the best way to trade, if you're trading, is just to see how the day is going, and in the second half, you want to see who's trapped, whether the longs are trapped or shorts are trapped, and you trade accordingly. If you're an investor, I mean, as we'll discuss in top 10 as well, there are so many stocks which are in the bull market of their own.
Yes. I was going to ask you that because yesterday also in the broader markets, stocks like MRF, Apollo Tyres, Interglobe Aviation hitting new highs in this volatile market.
Exactly.
So good time for investors.
Exactly. Kotak Mahindra Bank, for example. Exactly. Kotak Mahindra Bank, for example, even in a Bank Nifty's bear market is almost at lifetime high.
IndusInd is at a new high.
So the key here is that you'll have stocks which will continue to do well even in this market. So I think we'll now have a stock-specific market for some time. I think maybe in this entire month of April would be about individual stocks. You might have a template in place. But just my 2 bits on the index, it's going to be very volatile. It's going to be about risk-reward. And after 2-day rally, perhaps the risk-reward right now would be to wait for a dip to buy if you are willing to buy. And let's see. I don't think there's going to be one-way downtick for this market, though. That I think that phase, unless we have fresh negatives, and it's the start of a new year, that LTCG technical factor is out of the way. So that way things are looking slightly better, of course.
Actually, in fact, I would just want to assert that on the contrary, this is going to be a much more stock-specific market than we have seen in the last 18 months. Last 18 months were really a macro market. But now just about every analyst on the street will tell you that the micros are good and the macros are bad. So you really have to make your pick. Consumption is doing excellently well. I mean, you've been rattling off car sales numbers and CV sales numbers, and they're all spectacular numbers. So there is a lot of micro stock picking that one can do. But the index as a whole, I think, is going to be under some serious pressure till all the bad news gets out of the way.
Okay, well, let's find out what our wise experts have to say as we head into trade this morning. We had a good session from the US markets. Neelkanth Mishra, Credit Suisse, believes that after 3 months of underperformance by the broader market, a relative bounce back is now likely, as a stretch of 4 such months was last seen only in 2013. This may be driven by global markets correcting more than India. However, they stay cautious on the outlook for India's PE and EPS. Neelkanth continues to favour externally focused sectors like IT and metals, which should also benefit from continuing weakness. We'll use the correction in metals to build positions. Within domestic FOCU sectors, investors may prefer industry leaders, even in sectors like industrials such as L&T.
Okay, we've got some more equity opinion for you. A contrary view, actually, from Abhay Lajawala of Deutsche Bank, who believes that the continuing improvement in economic and industry data should translate into a sustainable double-digit growth in corporate earnings for most sectors. Increasing confidence in the industry turnaround indicates that the negative sentiment may be overdone. Deutsche Bank believes that consumer discretionary is the best way to play the rural reflation theme, followed by select consumer staple companies. Further adds Hiromoto and M&M Financial Services in the portfolio. Key plays on the transformative shifts in the banking landscape include HDFC Bank and IndusInd Bank. Within coverage universe, L&T and BHEL are beneficiaries of government spending, followed by Shree Cement, Ultratech and Dalmia.
Okay, so that's the view coming in on the equity markets. But let's talk a little bit about the rupee, right? Because tomorrow is the RBI policy. And ahead of that, the rupee has been quite strong versus the dollar. It closed at 65 yesterday. There was quite a bit of dollar selling. Pramit Dharmabhat of Veracity says the optimism that prevails in domestic equity markets will help the rupee to appreciate further. Trading range for the spot dollar INR pair will be 64.80 to 65.20.
All right. And on bonds, the best was played out yesterday. But today, Dhaval Dalal of Edelweiss says Indian government bond yields have declined after a sharp reduction in H1 supply and with Reserve Bank allowing banks to spread their mark-to-market losses over 4 quarters. He thinks these measures have effectively addressed concerns on demand-supply imbalance. He expects the government to focus more on the 1 to 4 year paper and floating rate bonds to get banks into the market. Based on the benign upcoming high-frequency macro data and surplus liquidity, he expects the 10-year government bond yields to trend lower, settle in a range of 7.25 to 7.4 in the near term.
Okay, big rally in the US market, especially in the second half. Here's Nigel with the world view.
Well, that's right. In fact, in the second half of trade, we did see a big rally and a big recovery, in fact, in those US markets. And that's why they did put on hefty gains. We had the FANG stocks, that's the technology-related stocks. They recovered in trade. Initially, all those stocks did take a bit of a hit. Why were they down initially? Well, Amazon was struggling in trade. That's on the back of Donald Trump's tweet that he put out. He said that, in fact, Amazon should be paying the US post office. And on the back of that, that stock was down initially. But during the trading session, it did recover. Late in the trading session, reports indicated that the White House is not planning to take any action against Amazon. And that's why we did see a bit of a recovery. Well, shifting focus to the European markets, they ended in the red in yesterday's trading session. Reports indicated that China's banking regulator is now looking at some of those loans that are given to large clients. And that's why financials were the biggest losers in yesterday's trading session. In terms of economic data, well, we had the Eurozone's IHS market manufacturing data. That came in at an 8-month low at around 56.6. Well, the Asian markets, they were a tad bit mixed. But now, in fact, a lot of those markets have come off the high point of the day. The Kospi, in fact, is now sitting with a cut of around 0.5%. The SGX Nifty, though, is indicating a flattish start. Back to you all.
Okay, thank you very much for that. Let me put one more important cue that came on yesterday. It's not stock specific, but generally very good for a broad swathe of banks and Indian companies. A panel set up by the government has proposed some seminal changes to the insolvency and bankruptcy code, and that could, speed up resolutions for definitely the MSME companies. Now, the key takeaways. For one, stressed asset funds can bid for defaulting companies. There was this rule that, if you are associated with NPAs, if any of your associate companies are NPAs, you can't bid. And this kept out these vulture funds or stressed asset funds. Now, that was just a cleaning up. But the more important changes are that the voting share that you need to agree to a plan has been cut to 66 from 75. So, small dissenters will not come in the way. That is a major change. A third change, of course, even for other liquidation, the amount of nods you need is been cut down to 66. But I think the more important thing is for MSMEs. Until now, you did not allow the defaulter to bid for your own company. But the big change that the panel has recommended is that for MSMEs, where turnover is less than 250 crore under current definition, the defaulting borrower can bid for his own company. I think that's important because for a whole lot of small companies, you won't find any competitive bids. So that, if it is accepted and made into law, that would be very good. And finally, home buyers will be treated as financial creditors. That removes a major impediment. Otherwise, you know, in a lot of cases, you go to the Supreme Court, it delays. So if it looks like these will be, put in by ordinance, it will not take long. This is only a big macro that is positive. It's not stock specific. But I just want to tell you that this is even while we battle on political issues, a good amount of good work is going on in the legal sphere, and this is the most important of them. I just want you to listen to someone who is best placed to speak about it. Behram Vakil of AZB spoke to us about these recommendations.
It will be the standard size that has been taken by RBI and others for defining MSMEs. 29A has been worked upon to try and make it less broad, and some of the language that was creating difficulty, including for the distress funds, both domestic and foreign. Voting percentage, I think COCs felt 75 was, a very high hurdle. The guarantee one, some of it were promoter guarantees. I think the courts would have finally come up with that, but we thought in the interest of speed, let's just clarify it. So there, the moratorium doesn't apply. Similarly, I think limitation, there was a lot of case law. Wherever there was case law swinging both ways, we thought we'd just give it clarity.
Well, this morning across the Asia, it's a mixed bag. There are still simmering trade concerns across many markets like Kospi, Nikkei, etc. But Chinese market is actually gaining today. It's up almost about 0.6%. Let's see. The last 2 days, we've actually decoupled from global markets. Let's see whether we can continue that positive trend. But this is the list of top 10 stocks to watch as we head into trade today. Anuj, what are you looking at?
So, for two large caps, Sonia, first is Pidilite. As we discussed, there are a lot of stocks in a bull market of their own. This is one of them. At fresh lifetime high, market cap hitting 50,000 crores, fresh delivery-based buying. So, evergreen stock, of course. The other one is Kotak Mahindra Bank. It's the strongest among the Bank Nifty stocks, within 2.5% of new lifetime high. Again, strong delivery buying. So, let's see. Though today, the market is going to be volatile. So, you'll have to stick to the best quality stocks. That's going to make you money, I think, in this market.
Okay. Well, there have been new developments in the ICICI Bank case as well. The husband of CEO Chanda Kochar's company, New Power, has got an IT notice. Timsi Jaipuria joins us to read out what that notice contains. Timsi.
Well, that's right. Sources right now indicate that the IT department has issued notices to NU Power Renewables. The IT department has issued notice under Section 131 of the IT Act. The notice issued is being done to check whether there's been round-tripping of own unaccounted money through Mauritius route or not. Sources also indicate that the IT department has asked NU Power Renewables as to whether Deepak Kochar's company availed any compensatory consideration for quid pro quo, whether an interest-free fund was availed for this particular thing. Also, sources further add that IT department has sought justification for shares subscribed at a huge premium, and an inquiry needs to be done to ascertain a detailed justification for such shares. The IT department is currently doing a detailed investigation, and they've asked NU Power to submit their justification as soon as possible so that further inquiry, further investigations can be concluded. And also soon sources say that there will be more such notices issued to people related in the transaction. We'll keep you posted on it.
Okay, thanks a lot for that. But the stock actually had a recovery yesterday. It was up almost about 3.5%. How do we approach it, Lata?
Well, I think the noise is not dying down, so there's bound to be red today. It looks a little difficult to recover. Just want to add that for the first time, we have an important broking company writing about the whole episode. This is Jefferies. They have cut the price target on ICICI Bank from 410 to 370. But this is more because of the Reserve Bank's NPA resolution rules. And they still have a buy on the stock, but they detail a little bit on the worries that stem from this investigation. The point they make is that this current CBI preliminary inquiry, if it expands into an FIR and there are criminal charges, then the bank has a danger of facing class action suits. And that can be a material impact on the performance. That is, there could be a growth slowdown. They go on to say, however, that the second line of the management is fairly good and can take over, and it's largely retail. So you don't need directions from the top. The bank can be run by the second-run management very well. They see the risk of business slowdown as very remote. So at the moment, the price cut is only on account of the Reserve Bank rules.
Okay, well, ICICI Bank, of course, will be top of mind through the course of the day, but we'll also be talking about a lot of order wins. Zensar is in focus today. Rima joins in to tell us more. Rima?
Hi Sonia, good morning. Well, this is on the back of an order win. The company's won a multi-million-dollar contract for the city of San Diego, where they will be executing their network services, contract. It's a 4-year contract. You can extend it by another 2 years. The contract value will not exceed $79 million, which means roughly, if you assume a $20 million revenue run rate, HDFC Securities says this will amount to about 4% of the company's expected revenues in F518, and they will have mid-teen margins. This deal is also important because the company's infrastructure management services business, roughly 17% of their overall business, has not been doing well. For the first 9 months of this financial year, the company's overall dollar revenue growth was at 2.5%. But if you strip out infrastructure management, then the revenue, so considering IMS growth has been tepid, this deal will boost that offering, and on the whole, it will be positive for the company. Back to you.
Okay, Hima, thanks a lot for that. Adani Enterprises, there's going to be some F&O adjustment on that, of course, and we are approaching the X-date for that, Anisha?
Well, yes, the contracts of the F&O contracts of Adani Enterprises will get adjusted today, given the record date for the demerger of the renewable business is 6th April. Now, the X-date is tomorrow, and that is when we'll see the adjustment in the cash markets. But remember, Adani Enterprises spun off its renewable business back in October when the stock price was 120. It has moved up to around 160 level already, and since they have also announced a demerger of the gas distribution business as well. As far as the Adani Green business is concerned, now they have a total capacity of over 2,000 megawatt, but the company is loss-making given the huge debt and the depreciation that they have to take on that particular business, and hence the equity value of this business is just expected around 20 to 30 rupees. That adjustment we'll see tomorrow, but today there'll be an adjustment in the F&O contracts for Adani Enterprises. Back to you.
Okay, that's important. Well, there's, these days we are getting bad news from websites. And here's some news coming in on, or at least views coming in on Vakrangi from theken.com. Rima, what does it say?
Well, they start off by saying that things don't add up at Vakrangi, whether it's the share price and the big run up there, or their business model, or even the SEBI probe. So first, on the business model per se, we know Vakrangi is close to about 40,000 kendras as listed in the company's, on the company's website. Now, the Ken visited 20 of them, and they went to the exact addresses as provided in the annual report. They said only 4 were completely operational, 8 were cyber cafes which processed online payments, and the last 8 did not exist. So they visited only a few of them in Kota, they went to some in Worli, etc. But they're raising questions that all of them perhaps do not exist. Secondly, they also talk about the overall, business model. They're saying the company reported revenues of 4,000 crore in the last year, of which 2,500 crore came from kendras, which means that each kendra every month needs to do 60,000 in terms of revenues. And considering that these kendras are actually in your tier 2, tier 3 cities, they're catering to the unbanked. That's why they're providing those financial transactions. Analysts say it's hard to imagine that 60,000 is coming coming from each Kendra every month. Also, with respect to the SEBI probe, they say that the initial SEBI investigation included 22 related entities for share price manipulation, of which 18 had dealings only in Vakrangi. But that probe expanded to 119 companies, and then SEBI could not find any instances of circular trading, and therefore that probe was dropped. But analysts are saying that SEBI does not have the entire mechanism to go ahead and investigate fully. So therefore, when the business model doesn't add up and things just don't add up, investors need to be a bit cautious.
Oh yes, need to be a bit, lot cautious in stock like Vakrangi. Just see the way it has moved. In between, the lower circuit broke and we had 4 or 5 upper circuit, but that downward journey has resumed after it was put back in that NSE high surveillance mode as well. But Sonia, what about Tata Motors? Finally, some good news.
Yes, finally, after so long, we're seeing Jaguar Land Rover report a pickup in North America sales, and that is important for them because 20% of their JLR business comes from North America. Finally, year on year and month on month, it's been a growth. So let me take you through the numbers. 10% growth is what we've seen year on year. 57% month on month growth is what we've seen, and the absolute figures 14,232. Jaguar still continues to fall, but Land Rover sales have picked up quite a bit in the North America market. We'll just get the graph up for you to tell you what kind of trend we've seen for the last many months. In the last 4 or 5 months, they've done an average of around 9,000 units in North America. This month, it surged to 14,000 units. I think that's something that the street will definitely like.
Okay. Yes, of course. We could do with all the good news that we can get. And I think we're getting some cool news from Voltas, Anisha.
Well, that is what Credit Suisse believes, that it's going to be a cool summer for Voltas, given the fact that, remember, the prices of ACs have gone up by around 10% is what they believe. Given the rating change in the energy norms that we had seen, they believe that the 3-star AC business is going to do well. And Voltas has one of the most competitive products in that particular category. They're also positive on the projects business of the company and expect the margins to expand there. Overall, they have outperformed rating on the stock with a target price of 700. They like the traction that they're seeing in the AC business, and also the fact that they're going to come out with their other consumer durables and home appliances business before the festive season of 2018, and that is what they're placing their bet on. Back to you.
Okay, thanks for that. Well, not a good situation, especially for people in Mumbai. Mumbai has lost almost 40% of its green cover in the last 20 years, and now with the metro, there's further logging of trees, only more heat, more pollution, and more sale of ACs perhaps. Eicher Motors is the other stock that we're looking at this morning. Remember, yesterday we saw Eicher up its production, its capacity targets. Earlier for FY19, it had a capacity in mind of 900,000 units. Now they've raised that to 950,000 units, and they've also announced a production of phase 2 in their 3rd plant in Chennai. Now, all of this put together just, exudes more confidence from the management as far as demand is concerned. Most brokerages have given it a thumbs up. Morgan Stanley has raised EPS estimates. They say that demand for Royal Enfield bikes remains strong. Deutsche Bank, CLSA has also raised the EPS estimates by about 3% and Deutsche Bank says that the fact that they've announced phase 2 of their 3rd plant production indicates that there is absolutely no slowdown as far as demand is concerned.
Okay, that's Eicher Motors to watch out for. The stock, of course, has corrected quite a bit from its highs, trying to recover now. Mangalam, why watching out for AkzoNobel?
AkzoNobel, Anuj, is the company that makes Dulux paints. They've announced a board meeting tomorrow to consider, board meeting on April 6th rather, to consider buyback of shares. So as the buyback approaches, we are just taking a look at the scenarios. Their market cap is close to around 8,600 crore rupees. They have a net worth of close to around 1,000 crore rupees and they have cash of close to 200 crore rupees. So if they go ahead and do the buyback with a board approval, which is 10% of the net worth, they can go ahead and buy back close to 97 crores. If they go the whole hog and take shareholders approval, they can buy back up to 240 crores. The most important thing though, I'll be watching out for is whether the promoters participate or not, because they have 73% stake in the company. If the promoters do not participate, that changes the acceptance ratio from 1.1 to about 4 or 2.8 to about 10%, depending on whether the company takes the board approval or the shareholders approval. So the most important thing is whether promoters participate or not.
Oh yes, that's important. But separately, of course, we're going to hear more of buybacks than dividends, because dividends are going to get taxed. Okay, Sonia, you're the harbinger of good news today. What of Bharat Forge and Ramakrishna Forgings?
Well, you know, the bottom line is that the North America market is picking up. We saw it with Jaguar Land Rover luxury sales, and now we're seeing it with the truck market as well. The orders have doubled year on year in the month of March. The sales have gone up for the North America truck market to 46,900 units. And if you pull up a trend, you'll see the last 2-3 months, it's been holding at around 45 to 47,000 units. But before that, it was on an average for the last 9 months at about 30 to 33,000. So the last 3 months have been exceptionally good. Two stocks in focus, Bharat Forge and Ramakrishna Forgings. Bharat Forge gets 12% revenues from there. Ramakrishna Forgings gets about 20% revenues.
Okay. Well, maybe it's time to recap.
Yes, in fact, we're done with our top 10 segment. Expected to gain are names like Pidilite, Tech Mahindra, Zensar Tech, Tata Motors, Voltas, AkzoNobel, Eicher, Bharat Forge, Ramakrishna Forgings, while stocks expected to be under pressure, ICICI Bank, Adani Enterprises and Vakrangi. But we also have two listings today. First, state-run Mishra Dhatu Nigam or Vidhani will make its street debut today. We also have ICICI Securities. Let's get both our colleagues in. We have Abhishek and Nigel joining in. Nigel, you go first.
Well, not great subscription actually in terms of Midani Sonia is what we saw. Now at the IPO price of around 90 rupees, the stock is priced at around 13.5 times its trailing earnings. Remember, in fact, you can't compare it with anyone because it's in a niche segment. They're into specialized alloys, they're into titanium alloys as well as super alloys. To give you a few details, well, this IPO consisted of around 26% odd. All the money that was raised was taken away by the government itself, so no fresh money coming into the company. In terms of their revenue breakup, defense is bulk of their revenues. More than 70% comes in from there, and that could be a factor that plays out in the times to come in terms of their revenue growth from here on. The total order book is roughly around 500 odd crores, and currently they're operating only out of one unit. Now going ahead, there are 2 more units that will come on stream, and that's what could help their revenue growth going ahead. If you look at the financials, well, they've given a very, very decent CAGR in the last few years in terms of revenue as well as EBITDA, but you can't extrapolate the first half of this year's numbers to the entire of the year. Why is that? Because as I mentioned, they have only one facility, and that one facility did undertake a shutdown. So on the back of that, you can't extrapolate those numbers, though the management has said that the next year they're expecting strong revenue growth as well. What are the risks? Well, the top 5 customers account for more than 65% of its revenues, and if there are delays in terms of those new facilities coming on stream, then it could risk their revenues as we saw in the past year. So watch out for this listing. No great shakes really expected on this one though.
All right, thank you very much for that. But I think the share that will hog the limelight in terms of listing would be ICICI Securities. The IPO was sold March 22nd to 26th, right? Abhishek, tell us the details. It didn't get fully subscribed.
Well, Lata, as you mentioned exactly, 3,520 crore is what the subscription came in, despite the fact that ICICI Securities IPO was initially planned for 4,017 crore. Just a bit of highlight is that the IPO was priced at 520 rupees and the offer size was actually trimmed down after seeing lower subscription to 3,520 crores. So the market cap now works out to about 12,400 crores against 16,700 crores that they were working with earlier. Through this IPO, ICICI Bank gets about 5.5 rupees per share, while the balance stake in ICICI Securities with a 15% holding discount will work out to close to 12 to 13 rupees per share. You look at the overall subscription, if you take into account the anchor investors, it is about 88%. Otherwise, it is at 78%. Look at the listing scenario. Now, the grey market premium, what sources tell me, is in the negative terrain, albeit by 20-30 rupees per share. So, I have placed a listing scenario between 420 to 570 rupees per share. Look at the P on FY19, it is anywhere between 21 to 28 times. Now the company has been losing market share even in terms of client. The client share has declined from 11.7% to about 10.1%. Even in the revenue, the market share is the next highest decline after Axis Securities. You look at the peer comparison, the broking yield has been falling and active clients as a percentage of debit cards has been declining. So with a banquet of products, while peers are trading between 11,000 to 24,000 crore of market cap, how the street takes about 12,600 crore will be seen very closely.
Abhishek, thanks a lot for that. Well, I've seen some expensive IPOs. This one really is right on top. I mean, Edelweiss has a market cap of 23,000 crores. And, it gets less than 5 or 6% of its business from pure broking. And a pure broking company to seek this kind of market cap in this age where they're losing clients left, right, and center to companies like Zerodha, for example. I mean, it's horrendously expensive.
It has always been a very, very low margin business.
Yes.
So, to expect valuations could be tough and not at the best of times. We take a quick break on that note and we'll return with our tech gurus to tell you how to trade the indexes and the stocks.